Opportunity in real estate credit is fascinating because what's gone on in real estate overall. In the sectors, office gets a lot of the attention, but valuations have changed materially over the course of the last couple of years, so that we're in a cycle, in a sense, in a way that you haven't seen it in corporate credit. So rebased valuations, lending against those rebased valuations, oftentimes in newer assets that they may have a lease up, they may have a little bit of occupancy to grow. So we find the most interesting situation in first lien lending, bridge and transitional mostly, as opposed to stabilized and core, where you take some different risk. And the premium we see relative to what you can create in traded markets, either through CMBS, that maybe mezzanine tranches of CMBS, or any kind of liquid version, you certainly get a material premium. And I think it benefits from some of the same trends that we've talked about with ABF and direct lending. Banks are operating in a fundamentally different way. Insurance companies play a role, but not really in the commercial real estate market in the lending side, because they're so focused on core and unlevered core. So we're finding some really fascinating opportunities, and we think in some cases we're actually, as the senior lender with a bit of leverage, able to produce a better return, a higher return, believe it or not, than certainly the pref or the mezz that sits behind us, and in some cases even the equity.